Welcome back to the Digital Asset Report. Bitcoin just hit another rough patch. The world's largest cryptocurrency fell to $86,000 today, its lowest level since April. Ether slipped below $3,000 while other digital assets continued trading down as well. More than $1 trillion in market value has disappeared since the October highs as traders unwind leveraged positions. Forced liquidations, fading rate cut hopes, and thin liquidity all played a part. But Washington isn't backing away from Bitcoin just yet. Congressman Warren Davidson introduced the Bitcoin for America Act, a bill that lets Americans pay federal taxes in Bitcoin. Those payments would go into a new strategic Bitcoin reserve to strengthen the nation's balance sheet and diversify assets. Davidson calls it Fort Knox for crypto and says it's a way to give taxpayers more choice while helping the U.S. lead in digital innovation.
What is a Bitcoin reserve? What does it do? And how do you build it?
First of all, the president created a strategic reserve of Bitcoin in part because the United States government didn't have a single custodian. You had every agency in the government that might have had an asset, seized an asset, or anything else, any kind of digital asset, they didn't have custody of it. So they were losing track of the private keys. So essentially when you lose your keys, it's like losing a pile of cash.
Yeah.
So they created an organized way and put it under Treasury to say, hey, we're going to have a single custodian for all of the Bitcoin, kind of like Fort Knox for crypto, right? Okay. And then they said, not all crypto is created equally. Bitcoin we want to hold on to. It's an appreciating asset over a long period of time. Some of these other things, we should just sell them off and buy more Bitcoin. But they wanted to do it in a deficit neutral way. And I think a lot of people have been like, well, how else do you put money in there? And so we're introducing legislation that not only codifies that executive order, so there's a common sense way to have custody for the Bitcoin and other digital assets, but you can contribute, so when you pay your taxes, you can pay your taxes in Bitcoin. So Bitcoin is currency in that sense, and there's no capital gains.
Former Commerce Secretary Wilbur Ross says the future of crypto is bright despite the downturn. In an interview with Fox News Digital, Ross said he's a long-term supporter now, praising regulatory progress and mainstream adoption. He said crypto is no longer just a fringe thing, pointing to ETFs, stablecoins, and new market legislation as proof. And on Capitol Hill, Senate Banking Chair Tim Scott says a major crypto bill could move forward next month. The legislation aims to clarify which assets fall under the SEC and the CFTC, giving clearer rules for the industry. Scott says he wants to make America the crypto capital of the world, with a final vote possible early next year. President Trump's nominee to lead the CFTC, Mike Selig, also cleared a key hurdle this week. The Senate Agriculture Committee advanced his nomination to a full vote. Selig, a senior SEC official focused on crypto policy, is expected to guide much of the U.S. digital asset framework once he's confirmed. And in New Hampshire, a first-of-its-kind bond is making headlines this week. The state approved a $100 million Bitcoin-backed municipal bond, the first in the world, and BitGo Trust will serve as custodian, holding the Bitcoin in secure cold storage. Governor Kelly Ayotte says the bond will fund economic development and innovation without risking taxpayer money. Over in Japan, 6 of the country's biggest asset managers, including Mitsubishi, UFJ, Nomura, and Daiwa, are exploring new crypto funds. Regulators are considering reclassifying cryptocurrencies as financial products and lowering taxes on crypto gains. Analysts say this could make Japan one of Asia's leading crypto investment hubs. And crypto lending just reached a new record. Galaxy Research reports $73.6 billion in total lending for the third quarter. DeFi now makes up to 2/3 of the market, led by Aave on the Plasma blockchain. CeFi lenders like Tether and Nexo also expanded with fully collateralized loans and greater transparency than in past cycles. That's it for today. Markets are sliding, but regulation, innovation, and adoption are still moving forward. Thanks for watching, and if you enjoyed this video, be sure to give us a like and follow along for more.